So, I hope we're all doing well, and I hope it's been a slow week, and that's fine, right? It's fine because we got to have one of the best positions, which is no trade, right, guys? Sometimes no trade is better than, sorry, not even sometimes, all the time. No trade is better than a forced trade than a bad trade. Cash is a position. Sitting on your hands is a position. Patience is an activity, guys. Patience is an activity. And the thing with this thing is, first of all, why am I talking about this morning? Because not coming into a week and hoping, okay, you're going to get some positions, you're going to be able to make some trades, and then going the whole week, probably without taking one, that does a toll on your patience. It tests your mental resilience, but also it also tests one very important thing: your belief in your system, guys. Believing in your system is the most important thing in this business. Why? Because that is the only thing that we have. The only thing we can control is our risk, is when we expose ourselves. Those are the only things we can control, and when we choose to close it. And guys, if we focus on that, focus on what we can control rather than focusing on what the market is going to do or what it won't do, we don't know. But once we focus on on what we can do, on what we can change, on how we can make our system better, then you start to see these changes. You start to see your equity curve keep rising steadily, not this haphazard boom, up, down, up, down. No, guys, we're talking about steady rising. And one very important thing, before we even go into analysis or anything, one very important thing that I want to discuss is a lot of traders don't know what their expectancy is. And that is a problem because if you don't know what you expect, then you don't even know if you have a good model or if you have a bad model or if you need to tweak something in your model or if you need to work on something. You don't even know. And this takes time, guys. There's no other way. This takes time. This takes repetition of doing the same thing over and over and over and over again, trying to get these results, guys. Trying to get this good result. And how do we even calculate expectancy? Expectancy is basically you take your win percentage, you add it to your average win. So your win percentage, you add it to your average win, then you put it in bracket, right? Then you take your loss percentage, then you add it to your average loss, then you subtract. Let me write it down, guys. Let me write it down. Let's use a brush. So we have expectancy, right? Let's put E. Pardon, guys. Look up my X. EX. My mouse is bad, so I'm using my trackpad. Expectancy is equals to your average win, right? Your average win. Sorry, guys. This is taking but guys, you just have to be with me. Just bear with me, guys. We're gonna get a new average win plus. Pardon me, guys. This is horrible. This is ugly. Plus your win rate, right? It looks like a 2-year-old is playing with chalk. I need to find a better way to do this. This is not even working. Let's delete this. So your average win plus your win rate Okay, then we'll put this in brackets. Then we subtract from your average loss rather. Right? But your average loss plus your lose rate, right? So this, guys, is what gives us is what's gonna give us your expectancy. So if your expectancy, if you put these numbers in, and your expectancy is negative, that means there's something wrong with your system. If your expectancy is positive, that means your system is fine. If your expectancy is break even, that means your system is fine. So what we need to do now is probably okay. Now it's time to eliminate the bad trades. Eliminating the bad trades. So eliminating the bad trades will do what? Increase your average win, increase your win rate, and it's going to reduce this. So we're trying to reduce this, we're trying to increase this. So for example, let's say my average win is for every my average win is, for example, let's say it's $80. Let's say my average win is $80, right? $80, right? And then my win rate is let's say my win rate is 30%, right? My win rate is 30%, so that would be 0.3. That's an example, right? So my win rate is 30%, right? And then this in bracket, then we subtract from my average loss. So my average loss might be, let's say my average loss is $15, right? My average loss is $15. And then, so why is this 0.3? Because we change it from percentage to figures, right? So we divide it by 100, and then this would be 0.7 automatically, right? If you put these numbers in, let's see, let's put these numbers in, that would be equals to um, 80.3 plus 15 point, minus 15.07. Let's do the math. Give me a second, guys. Minus 15.7. That's 64.6, guys. So this tells me, okay, I'm expecting a profit of $64.6 on every trade I take. Now, this is a positive expectancy. That is what we want, guys. We want that expectancy to be in the plus. And this comes over like a large sample size. We're talking like 20, 30, 40, 100 trades, 200 trades, not just like 10 trades or 15 trades. Like at least I want you guys to have at least like 20 trades under your belt, 40 trades under your belt. Then you can calculate this. So it gives you confidence in your system, and it tells you where you need to improve. Do I gotta improve on my average win? Do I have to improve on my win rate? Do I have to bring my average loss down? How do I do this? So this gives you numbers, because at the end of the day, guys, this is just math. It's just numbers. It's just numbers. And um at the end of the day, guys, this is all just numbers, right? It's all just numbers. And Once you start to treat it like it's a math equation, you start to make headway because it's all probabilistic. It's all probabilistic. So whatever trade you enter, you don't think, oh yeah, this is gonna win. No, it's not important if it wins or if it loses. What's important is it following my system? Is it repeatable? And will I take this trade 100 times? Always ask yourself that. Am I trading my system? Sorry, guys. Am I trading my system or am I trading my emotions? Very important questions to ask. Because this week, market will test your patience. Market will test your patience. Market will test your resilience. Sit on your hand. Sit on your hand, guys. So let's get to the market. So Euro USD, as we've been saying for months, right? Euro USD swing wise, it's bullish, right? From this swing low to this swing high, right here, right? We have from here to here, right? Right, guys? So that's our swing low, that's our swing high. And now if you look at the immediate order flow on the daily, we are we're bearish on the daily, right? So these are fractal high, these are fractal low right here. Our fractal high right here at 1.175, our fractal low right here. And now our immediate order flow is bearish, right? This buy before the sell holding, this buy before the sell holding, right? So for me, it is, and then we came here, we grabbed this major liquidity, and we have this liquidity open here that we're targeting, right? So and now we're just making that retracement upward and upward. So it's all about patience, guys. We spoke about this yesterday. I said, okay, we're looking for short positions from around here, right? But only if we get that confirmation. And what happened, guys? We didn't get that confirmation and we avoided a loss. We avoided taking a bad trade. Why? Because there was no confirmation. And now we've kept on retracing higher and higher. We've retraced into the quarterly open, which gives us better positions, right? This is going to give us better positions, better what? Risk to reward even. So being patient will even give you more in the long run. Why? Because you don't waste your energy, you don't waste your capital, you don't waste your resources on bad trades. You wait for the good ones and you go in on the good ones and then you take it. Because if you've wasted your resources on the bad one, not even only about the money, it's about your mental what's the name? Your mental state. Because once you've taken that bad trade, it's a compound effect. It starts to spiral and spiral. When the good one comes, your confidence is down, your mental state is in disarray. You cannot even take advantage of that opportunity. Okay? So please and please let us stay focused. Today, I don't know, we'll just talk a little bit about the market because nothing really happened this week. But I hope you guys enjoyed this little rant or little session that I had in the beginning. If it's cool, please let me know. If it's just let's go straight to business, let's go straight to business. Okay, so Euro USD, as you can see, now we've retraced into this, we've grabbed this liquidity right here, and quite nice, and now we're in the supply zone. So, and if you look at it swing wise, right, from this swing high to this swing low, we put our PVD tool here, and you can see we've retraced into premium pricing. So it's quite nice to look for short from here, but what do we need for short? We need a fractal structure shift. Where's our fractal low on the 4 hour? We have our fractal low right here, our fractal high right here. So if we don't break this, I'm not interested in short. If we don't break this, I'm not interested in short. Okay, guys? So that's what I'm keeping my eye out for USD. Let's see what happens. Let's see how we close today. Maybe from next week we start to scale in some positions. Okay, for the dollar index, we kept retracing downward into this sell before the buy, and I think we've grabbed liquidity. We've grabbed liquidity below it, so it's possible that this can cause a change of character that we're looking for on dollar. We've connected with the daily demand level that we've been talking about. Now we've come here, we've grabbed liquidity. So let's see if we start to break some highs, right? Start to break these highs, right? I'm looking at this high right here, 98.69. Let's see if we start to break it, and then we can look for those further long positions. So log in the dollar while shorting Euro USD and all of that. And with GBP USD, similar story, guys. Similar story. There's not too much to talk about. We kept on making higher prices and higher prices. No confirmation for short. I like this market action. I like the way we're squeezing into the highs. So if we start to see some bears stepping, like we start to see sellers stepping, then we just follow, right? So we want to see some fractal structure being broken, right? I want to see sellers stepping in at below 1.341, then perhaps we can look for those trades. And I like it because we've retraced into where, guys? Into the quarterly open. Similar to Euro USD, we've retraced into the quarterly open. It's looking beautiful, looking wonderful for those sell positions. So let's just wait and let's be patient. With NZD USD, quite not very interesting at the moment, honestly, but I would like for this high to be grabbed, this liquidity high to be grabbed. Perhaps we make some higher prices, and then maybe inside here we can start looking for those sells once we guess what, a confirmation in the form of change of character. In the form of a change of character, we get that confirmation, then we sell NZD USD. With AU, as I said, it's yesterday we were speaking about it, like saying, okay, it's a position that we can edge against our short. But honestly, it's a very ugly chart. Honestly, it's a very ugly chart, and I don't like ugly charts. I'm just gonna stay away from this. I don't nothing to do here. With USD CHF, we spoke about this, right? We spoke about perhaps let's clear this up a little bit so you can see. We spoke about the quarterly open right here, perhaps acting as support because it was acting as resistance yesterday, and it's beautiful resistance. We said if we break it and maybe we start acting as support, then we can start looking for those further loans. But no, it didn't happen. I remember what we were talking about. We're talking about this risk on this safe haven pairs, right? This safe haven currency because of the trade war going on between US and China and Trump just talking, right? Investors would move towards safe pairs, right? Like the Swiss franc, like the Japanese yen. These are safe pairs for investors at the moment. So I am not surprised to see some Swiss strength. That's beautiful, beautiful to see. So let's just wait. Now the other flow is bearish. I'm not looking for buys on this at all. I think it would be retarded. pardon my pardon my language, but yeah. So what do we have? Supply is in control, right? These are buy before the sell. So for me, it's just all about, now we've grabbed liquidity here. It's all about, okay, perhaps we can get maybe a retracement, and then from there we start looking for those shorts. Maybe grab some liquidity, come back into this quarterly open, we use it, we grab that liquidity, and then we start looking for those short positions. For now, it's made its move, guys. You cannot sell this anymore. You have to wait. So let's wait for some structure to develop, and then we look for those sells. Gold. Do I have to say anything except for buy? Okay, so we came above 4378, and so for me now, have we grabbed that liquidity? No, we haven't. It's still open. Perhaps we grab this liquidity, make some lower prices, and then from there we can start looking for those buys, right? So we have liquidity resting here, right? And then you can just start looking for those buys. All right, we can start looking for those buys. So I would like lower prices on gold, perhaps to this level, and then we start looking for those buys. On USD card, I spoke about it. This is very bullish, but I'm not really interested in looking for any positions right now. Not because of where it is. It's bullish, but also if you look to the left, we've grabbed this liquidity, and after that liquidity, you can expect a retracement. So that's what I'm sort of waiting for, but we're just consolidated. So I'm sort of waiting for a retracement, perhaps lower prices. We grab this ascending lows here, and then come into this area, and then maybe we get that change of character and we start to look for higher prices. or maybe from here. But right now it's just being choppy. You can see it's barcode movement, just straight movement, nothing really. So we wait. USD JPY, right? Beautiful, 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 beautiful all round. So now we're just retracing. If you look at the immediate order flow, we're bearish, and that is because, right, people are moving towards the yen, people are moving towards the Swiss franc, as we discussed, moving away from the dollar, right? So now we've come into this demand level. Let's see what happens when we grab this liquidity. Perhaps maybe we want to fill this gap, or perhaps not. So we just wait and see what happens. The only reason that would make me look for buys on this thing is once we start to switch, right? We start to show strength, boost starts to show strength, and the dollar starts to show some strength. Because we would talk about the yen in a second, the yen basket. I'm going to show that to you now. The yen basket is in, it's in quite an interesting zone, which you can see what I'm talking about, guys. If we come here, is it a weekly? Yes, beautiful. Right, you can see, let me clear up this for you guys. Yes, we're bearish on the yen, but also we've come into this nice area of demand. We've grabbed this liquidity below. So it's, so now it's, us looking for buys is not the craziest thing in the world. Why? Because we're in this strong area of demand. We've grabbed liquidity right here, and then, so for me it's just all about, okay, can we start breaking the highs? Once we start breaking these highs, right, this was our fractal high right here. So once we start breaking these highs, we can start looking for those shorts on USD, yeah, USD JPY or Euro JPY and things like that. But you have to be careful. So let's see how the market develops. We don't rush anything. For now, if you look at this, we're still inside the supply zone, right? We're still trading inside the supply zone. So it's still possible that we could just, but the thing with this supply is there's no liquidity, right? There's no liquidity in this push down. There's no liquidity in this push down. So perhaps we grab the top and then maybe we start to retrace, or we grab the top and then we start to change character and move upward, grabbing. See, guys, look at what we have to target. So don't be in a hurry. Look at what we have to target. All of this liquidity, liquidity, liquidity. We have it to target. So don't be in a hurry, guys. Let's just be patient and let's just be calm, and you see patience will pay. All right, guys. I wish you a wonderful weekend. Be productive, back test, study, and see you next week.